Perfect. Thanks everyone for joining us today as we go through the results of our Ana Paula PEA that we published last week. Very proud of the work that went into this and continue to build on that momentum. This will be a keystone asset for us going forward to continue to build the company and a key growth objective for Heliostar as a whole. This webinar will be focused primarily on the Ana Paula project. However, we will be talking about the context of it in a few of the rest of our portfolio briefly. We will be making forward-looking statements today as we continue to look towards the future of the company. Broad teams worked on this across the entire Heliostar team, as well as many others. However, today you'll be hearing from myself, as well as our CEO, Charles Funk, and our COO, Greg Bush, leading the charge. At a high level, we managed to produce some very impressive metrics from the Ana Paula PEA, in line with what we've been targeting from this study. 100,000 ounces a year at around $1,000 all-in sustaining cost over a 9-year mine life based on the current resource. Some very impressive free cash flow numbers. This mine at 100,000 ounces a year will make more money than most mines twice its size, given its incredible cost profile. And we'll go into the details of how we're able to achieve that with this very special project. Our base case economics show an NPV $426 million at just $2,400 gold, a very conservative gold price in today's price environment. However, our sensitivity showed the upside case to just over $1 billion on an NPV5 basis and an IRR at just over 50%. We believe this is a full cycle asset that performs incredibly well in any gold price or margin environment. And as I mentioned, will be a keystone cash contributor to Heliostar over the next decade. We are actively working on this as we speak, with 3 drills turning currently. Working on a feasibility study ongoing to be able to continue to de-risk the project with focus of bringing it into construction in the first half of 2027 and targeting commercial production in 2028. Speed is one of our core tenets, as you saw on our title slide, and our objective with Ana Paula doesn't vary from this in the least. From a cash flow profile perspective, we really do think Ana Paula is something special. From $300 million invested over the 2 years of pre-production, we'll be able to make close to $100 million in average annual free cash flow. The payback of just shy of 2 years at a $3,800 gold price just shows just how strong the economics are, and we believe will be a very attractive investment for all involved. An NPV to CapEx ratio, 3.4 times, again, at the upside case, shows just how many times this project will pay itself back for that $300 investment as we execute, as we harvest those free cash flows, and as importantly, those free cash flows will be leveraged into additional growth in our portfolio, getting us towards our corporate objective of being a 300 to 500,000 ounce a year producer before the end of the decade. By bringing Ana Paula online, we'll have the cash flow platform to do that, as well as getting us more than halfway there with this project online in the second half of 2028. Excuse me. We will be at that 150 to 200,000 ounce a year of annual production range. If you look at peers in that range, in the bottom half of the cost curve, that's a $2 to $3 billion market cap company, and we believe we should re-rate into that range and be no different. Ana Paula really is something special when it comes to the cost economics. This is the global AISC cost curve as provided by S&P Capital IQ, showing where Ana Paula fits on that curve. We are at just a hair over $1,000 all-in sustaining costs, being in the bottom 13% of this global cost curve if Ana Paula were online in the first half of this year. That provides an incredible amount of margin in any sort of gold price environment. And something that we think will be able to capture and really propel Heliostar forward as a company in through the later part of this decade and well beyond. I'll hand it over to Charles now to talk through the project and overview in a little more detail.
Yeah, thank you, Stephen. No, I think from my perspective, it's fantastic to be able to now demonstrate the economics of our approach to Ana Paula. For those who've known us over the last couple of years, we acquired Ana Paula in the beginning of 2023, and we did with a view that the underground was the most lowest risk, highest economic return for the lowest capital spend that we could do for the asset. It was a different view to how people had looked at it before. And we spent the first 12 months of 2023 recasting it through the underground lens on a resource basis. And then we started to turn our attention to the studies. We looked at a number of options and pathways throughout last year and this year. And so it is a great pleasure to be able to show these numbers and show the strength of these numbers. We always targeted an asset that could be a very high margin mine that could produce significant free cash flow. And this PEA shows that. As everyone who's been following us knows, we're underway and have been working on a feasibility study for some time now. The idea of putting the PEA along the way was because we're not expecting to get that study out until early 2027. And so we wanted to show those economics in the meantime. We'd done most of that work and we still have a reasonable portion of inferred ounces. About 1/3 of this study is inferred ounces, which we're currently drilling off. So this allows us to show what we think will be the potential of the Ana Paula mine when we put out the feasibility study in 2027 and start building it. Our intention is to be in commercial production in 2028 and be exiting 2028 at that 100,000 ounce a year run rate after the initial ramp up. Stephen touched on exactly how transformative that'll be for us. Our business plan has been all around optimizing the cash flow from our existing operations to bring on Ana Paula, which is a step change up in production scale and a material decrease down in our all-in sustaining costs, which is exactly the growth pathway we want to be on as a company. In terms of the asset and its location, we're about a 4-hour drive south of Mexico City in Guerrero state, immediately north of Torex's Morelos complex. We've got road access, we've got power to site. We're piggybacking on about $100 million invested into this project previously. That's not just power to site, it's the decline, it's a 53-man camp. It's probably saving us, 50 odd million, in my opinion, off the total capex of a new build here. That doesn't have to be reflected in the 300 million capex due to that previous expenditure. We're close to the nearby town of Quetzala de Progreso. Number of port accesses. You can head south to Acapulco or the more common port of Manzanillo to the west. So we're building a mine in a jurisdiction that has a number of large gold mines. We're very close to a large skilled workforce. And we think we've got all the steps required to comfortably build the Ana Paula project in 27 into 2028. Stephen, if we can advance, please. So we only did a minor update to the resource. We've done a few more holes since the previous resource update, but you can see here in the chart in the top right, to support this PEA study, an updated measured and indicated resource of 742,000 ounces at 5.4 grams per tonne, and an increase to 514,000 inferred ounces at just under 4 grams per tonne. The majority of that cutoff and majority of that increase has come from a change in the cutoff grade as we've been able to put economics around Ana Paula. But pleasingly, the grades hardly decreased at all. This is still going to be a very high grade underground gold mine, with most of the mines sitting above 5 grams per tonne and an over 5 gram per tonne life of mine average grade. What really separates, to reinforce, and hopefully we'll continue to reinforce it through this presentation, the high-grade panel at Ana Paula is wide, disseminated, shallow, with really good ground conditions. And that's what sets up the advantage that you see through on the all-in sustaining cost line. We're going to be using long-hole open stoping, as Greg will go into some detail. We have the $300 million capex with an initial 9-year mine life. We have 76 million of sustaining capital if you include the 3 million in closure costs. It's a relatively small mine. An 1,800 tonne per day mine is not a large mine. Again, it's the grade that really drives the production scale from a mine of that scale. We are building a 250 tonne per day BIOX circuit on the back end. About 45 million of the capital is that, which will get us an extra 10% recovery to take us to 90% recovery, which is pretty significant additional free cash flow in this price environment. We've got relatively low cost for the reasons I touched through. And I think the thing that stands out that Stephen touched on the curve is, if we were to put it in production today, we would have a $3,000 margin. It's an incredibly competitive mine. That doesn't matter whether gold's $4,000 an ounce or $2,000 an ounce. It's still going to be one of the highest margin gold mines in our industry. And that's the attraction to it for us. Stephen, if we can proceed, please. So if we look down that breakdown there, the way we've designed the mine is to have an initial 6-month ramp up in year 1. That's going to process some development ore and some lower grade material to bring the plant into steady state operation. And once we do that, the natural shape of the ore body is to have higher grade early in the mine life. And so we go all the way up to nearly 140,000 ounces of annual production, averaging 130 for those first 3 years post ramp up, driven by higher grades. And then we move out across life of mine. We see also that the majority of the early years of production are measured and indicated, with the later years being more of the inferred material, and there's a breakdown of that in our press release. And to repeat, we're currently underway with a 15,000 metre drill program that will look to convert all of that inferred. We're going to be targeting a 10-year mine life averaging 100,000 ounces with our feasibility study beyond this. Ultimately, this PEA has us producing 875,000 ounces of gold from the mine plan that we see in front of us. If we move forward, I think this graphic's a lovely graphic to try and show the advantage that we have with Ana Paula. What you can see in the center is the resource model clipped above 2.5 grams per tonne gold. And you can see in yellow the stopes and in grey the development work that's coming in there. To the right of that, you're showing a bar chart that's showing the ounces on each level. Ounces there in magenta above 7.5 grams, in pink above 5, in red above 3.5, in orange above 2.5. And there is, in some stopes or development work, some lower grade material that gets caught in and becomes economic in the yellow there. What you can see in the yellow line is the average grade by each level. And you can see it sitting there around the 5 grams per tonne material. You can see there's a huge, large blob that coincides with the high grade panel. And then there's some deeper zones down in the expansion zone, which pulls the infrastructure down to meet that as well. Again, what drives these low costs is the concentration of that mineralization. And if I put my geology hat on for a couple of seconds, if you look at a good underground gold vein system, say it's 5 meters wide at 10 grams per tonne, that'd be 50 gram meters across the width, and you need the access and development to get there. If you look at Ana Paula averaging 60 meters wide at 5 grams per tonne, that's 300 gram meters. You get so much more gold for so little additional development, which is why we're able to produce at such a margin. The high-grade panel is 280 meters long, east to west. It's 200 meters high from top to bottom. It is plunging, and it's 60 meters wide on average. Very, very unique characteristics for a bulk tonnage underground. If you look at that high-grade panel part, it's about 3,900 ounces of vertical meter, which puts it at the very top of the industry peer group. And then a metric that I think is particularly pertinent for us, for every 1 linear meter of ore development, you access 35 ounces. There's world-class mines or competitive peers are probably below 10 ounces for 1 meter of development. So we're able to access so much more gold, not just because we've got a wide ore body, but it's also not spread out over a long linear vein as well. So that concentrated distribution of the gold in the high-grade panel sets it apart. And we're also fortunate that we've got really strong or really quality ground conditions, meaning we can keep large stopes open for bulk underground mining, as Greg will expand on. The compactness of Ana Paula is its competitive advantage, and I'll talk about it later. It is still open for expansion below that. We're very confident that we can have a very profitable mine on the back of this PEA in the high-grade panel and the initial expansion zone, and then we look forward to being able to grow it beyond there. I'll ask Greg to step in and talk through the mine plan and the economics, and then take a bit of a discussion on the upside beyond that. Greg.
Okay. Yeah. So Stephen, I think we can advance to the next slide. Yeah. Okay. So the graphic on the left is just showing it's not every year, but just a few select years out of the mine plan. What I'd like to point out with this is that the way the mine plan is designed, we get in, you'll see at the base of that high grade panel at about the 700-foot level, at the beginning, at commissioning, and then we work our way up and work our way down from there. So as Charles mentioned, though, there's some very high grade material down deep that's pulling the infrastructure down after those those high grade bits that are down there. If assuming that we're successful in expanding those zones, then those metrics that we were showing on the previous slide will look even better. So you can see as you work through the mine plan, and then I guess the only other thing I wanted to point out on this at the end of the mine life is that the ore body runs out to the surface, and we're not planning to leave a crown pillar. We'll just mine right to the surface and then backfill those stopes that daylight. So I guess the other thing is, like in the high grade panel, the part up at the top, that's where we've got that 60 feet across there in that zone. So we'll be doing transverse long hole stoping in there. All the rest of the production is longitudinal long hole stoping. There's a very, very small amount, I think, of development ore in relation to the total, and there's no cut and fill. So you want to advance to the next slide, Stephen? So here we've just got a couple of graphics that show the general site layout that we have contemplated, with an inset there that shows the detail around the portal and the plant. I guess the main thing to point out here is it's a very compact little mine site. We put everything, the mill. The mill is close to the portal and close to the paste plant, and all that's close to the tailings deposit. That's that blue circle you can see down right below that inset, and then off to the east there you can see some green, some green polygons there. That's the warehouse and laydown area in the camp that we have anticipated. So if you look at that inset there, you can see where the mine portal is that beige polygon that's right on the west side of that inset. And then the ore comes out it basically right to the stockpile. We put in a couple of stockpiles just to manage the feed going into the BIOX circuit. We don't think we're going to have to do any blending, but we put some capacity in to do blending at the surface if necessary. And then as you work your way through the plant, then we come back across that valley there to the filter plant and the paste plant. The paste will be pumped back down the ramp. And so I think that's all. The other thing is you can see there's some power lines going across the bottom end of that section that we're showing there. So there's 3 power lines going across there. 2 of them are very high voltage, but there's one 115 kV line going across there. So what our plan assumes is that we tie into that 115 kV line. Next slide, Stephen. So we have this just to show, a layout of the flow sheet. Stephen's kind of broken it down into areas there, so you can see where the primary crushing and grinding, and there's a gravity circuit, and then flotation. The flotation here, there's no cleaning, and it's a fairly coarse grind. We make just a rougher con. It's actually not beneficial to clean it up. The little bit of carbonate that you get into into the concentrate's actually beneficial to the BIOX circuit. And then we go from there into into the BIOX and the CCD and neutralization circuit, and then tailings. Area 5 is the CIL and the cyanide detox circuits that we. So I don't know. I don't think there's anything else that when we get to the questions, if there's any questions on the flow sheet. So if you want to go to the next slide, Stephen. So what they're kind of summarizing the work that we've done, the work that we've done to date. We've done, it's fairly extensive flotation testing that we've done some variability flotation testing. We've looked at cleaning, and we've looked at some sequential flotation. We've looked at gold only flotation, just as as we were working our way through the flow sheet options. We've got the grind optimization testing is done. So, and to support the BIOX, what we've done is we prepared 2 composites out of the mine for amenability testing with the BIOX, and we at the end of the day, after looking at the makeup of those two concentrates, we decided to combine them into one. And so the standard batch amenability testing that Metso does for the BIOX consists of 8 or 9 batch tests that are carried out. And you get an oxidation curve, and then you can also get a cyanidation recovery curve on each of those stages of oxidation. So our design parameters at this point, 1,800 tons a day. That results in a BIOX circuit that runs about 250 tons a day. We've assumed that we get 90% sulfide oxidation, and so a 90% overall recovery of the gold at a fairly coarse 160 micron grind. There's no regrind circuit. The concentrate is fine enough as it comes off the float circuit that we don't need to do any regrind for the BIOX, either for the kinetics or for the abrasion in that circuit. And that last bullet is, that last bullet's incorrect. It's actually a 24-hour leach time in the CIL circuit. So for the feasibility study, we've got an extensive program. It'll be this current drilling program will support the next phase of the met work. There's some limited portions of the ore body where we don't actually have any direct flotation testing. So we'll be covering those. We'll be doing a lot of flotation variability test work. The sequential flotation testing we're doing as a potential upside case on the economics. Work index abrasion testing, just kind of the standard things you do when you start trying to do the design on your circuit. We'll actually be doing some BIOX variability testing, and we'll do a continuous BIOX test as well. So that's what's coming up this coming year with the feasibility study off the back of the current drill program. So Stephen, can you? Yeah. So just a few slides here. Just talk about a little bit about BIOX. It's not. There's not currently any BIOX operating in North America, but it's extensively used in Asia and Africa, and there's some in South America. I don't know, the standout number there is just that, over the last 30 years, there's been 36 million ounces produced with BIOX. And I think over the years that Metso has done, incredible amount of work to improve the efficiency I think they've gone a long way towards perfecting the technology. It can be used in, very cold climates, very hot climates. And it's also very, very scalable. And there's a list there of companies that are using the technology, but I'm not sure most of you guys recognize those names on the map. The next slide, Stephen. So a little bit on our CapEx. We've got for the feasibility, or for the PEA, we've got 300 million in initial CapEx. The breakdown there is the way the CapEx was put together. It was M3 did most of the work on this PEA. Well, they were leading the PEA. The underground piece was costed separately by JDS. We actually have detailed mine plans, as you could see from the graphics we were showing there. The BIOX CapEx numbers supplied by Metso, and that's fairly standard. What Metso would do for a PFS, for example. The test work that we did is what they would do for that level of study. Contingency is at 58, I think it's 56, 57 million. That includes the contingency for the mine, as well as all the direct CapEx for the rest of the plant and infrastructure. Sustaining CapEx is almost all in the mine. There's 3 million, and we will stage the dry stack tailing storage facility. So that process CapEx is that. Then there's not any other sustaining CapEx, just due to the 9-year mine life. It's not needed. So next slide, Stephen. OpEx, is it Charles? Showed earlier in the slide, in the deck there, with the ASIC. Here's a breakdown of where the costs are in the mining and processing. So what you don't see here is the actual cost per ton of concentrate going through the BIOX is about 100. I want to say $108 a ton or something like that. It's right at $100. So, but that works back into a much lower number, obviously, for a ton of ore, or per ton fed to the mill. So we've got their cash cost are $700 and $109 a ton. So you want to go to the next slide, Stephen? No. Yeah. I'll hand it back over to Charles.
Perfect. Thanks, Greg. No, I think, we've got an advantage when we put this PEA out, is that we'd been doing a lot of trade-off analysis and work for the feasibility study. We'd like to think that this is not a dream sheet PEA. This is a mine that we plan to turn around and start building in early 27. So we're going to be directly accountable for the costs that we put into it. We're fortunate that there has been recent underground developments in the area. Torex has just completed their Media Luna underground and declared commercial production. So we've got a very good handle on what local costs are for similar mining methods in the area. We're using M3 for this study and to lead the feasibility study, who was the lead EPCM contractor for that Media Luna underground. So our knowledge of costs is much more advanced than I think it would be for some other studies, given the amount of feasibility level work that we've got underway, and the local knowledge that we're able to piggyback on the back of. As we move forward to where we think there's opportunities from that study, the first two of them come from the drill bit. As I touched on, we're in the middle of a 15,000 meter drill program. There's a potential we expand. We think we can convert that inferred material into the M&I category so that it makes it into the feasibility study. We were also able to demonstrate in 2023 that we were lifting the grade as tighter spacing showed better continuity. We weren't adding tons. We were demonstrating the existing tons had higher grade through higher confidence with the drill spacing. So that's the main focus of the initial drill program. There's the potential for step out hits. We've hit some really nice satellite results. Over the last sort of 6 or 8 months, we've put holes out like 16 meters at 16 grams, 25 meters at 6 grams in zones surrounding the high grade panel. And this infill drilling will be able to define those to see whether they can make it into the mine plan. We've clearly got depth potential, which I'll talk about, and potential at the northern zone as well. And then further optimization of that mine plan, looking to potentially bring some higher grade forward. We've got a number of levers there, greater optimization or greater efficiency that might be able to achieve an even lower cutoff grade are a couple of the opportunities through optimization of the mine plan that we'll be looking through next year and publishing in the feasibility study. Next slide, please, Stephen. As we move forward, so the other reason that we chose to do the PEA was we expect early next year to submit the modification of the permit to go from the current open pit permit to the underground that we've always seen as the best pathway for Ana Paula. We think that'll take approximately 12 months. And so that's why we decided to do the larger FS with the inferred resources, which is why we decided to put the PEA out, working backwards from there. We were able to extend the COOS permit, which is the change of use of soils permit, which allows us to clear the area needed for the mine. Ultimately, this underground mine is a 1/3 of the approved footprint of surface disturbance. So what we're asking to change is to actually make a smaller disturbance than we're already approved for. The key two things in my mind to think about in the change of permit is that we're moving the plant site from next to the pit to next to the portal for obvious reasons. And we're moving from a conventional tailings facility that was permitted from the open pit to a dry stack tails, which works better for our underground plan and is simpler from an environmental perspective. So the main three things are changing of the plant site to the portal, changing to a dry stack tailings facility, and not having to clear the area for the open pit. We're going to submit a number of permits. The major one that people should be watching or that investors should be watching is that underground MEA that we're going to submit in Q1 to the letter of the law. That takes 6 months in reality. We think about 12 months is the appropriate timeline. In addition to that, there'll be a number of smaller sub-permits that allow some sterilisation drilling, working on improving the roads around the mine. So there's a number of smaller studies beyond that we have underway. And as we continue to advance, one of the most powerful things that we have is our community relationships. We've got a number of long-term purchase agreement or access agreements locally at the mine. And as we reach out further out to the communities that we impact and are able to positively impact it in terms of employment and improved living standards, Southern Guerrero is a fairly poor state. It has some extreme levels of poverty. One of the things that we're really looking forward to doing as we scale up and build a profitable mine, being able to support these communities with access to better water, access to better living conditions, access to better education and employment opportunities. We're very fortunate that our community relations manager, Gonzalo Gonzalez, has been with the project for coming up 10 years now, and we've been able to demonstrate a lot of continuity. And I'm really looking forward to the impact that we can have when we bring Ana Paula online. Stephen, if we can continue. So this leads us to a development timeline that we've fleshed out here, put on paper. The infill drilling's underway at the moment. We're about to start out, and I'll talk about some of the step out drilling that's about to commence. And the permit submission in Q1. The metallurgical testing program for the feasibility study on the back of the drilling program that's collecting that material early next year. We'd always tied the decline advancement to cash flows, or at least I had, from San Agustin. And so San Agustin should be up and running late this year for steady state gold recovery early next year. And that allows us, what we're targeting is to push the decline at Ana Paula. For those who don't know, there's a 412 metre deep decline. That's 4 by 4.5 metres production scale decline by the previous operator. We plan to restart that in Q2, complete it in Q4, and maybe even advance on it there. We think it gives us a number of advantages. First of all, it's pre-sunk capital that lowers the risk profile of the operation. It gets us into the ore body, which is wonderful from an infill drilling perspective, and there's no substitute for seeing and sampling the ore body that you want to mine. And lastly, it's the drill platform for additional resource upside that we believe exists at depth at Ana Paula. So that's going to be a big milestone for us next year. Then, as Stephen touched on, with this PEA out and the study, the report that will come out in December on the back of this, that's really a trigger for us to start the financing discussions. We've had some high-level preliminary discussions. Our corporate goal is to generate 100 to 150 million in cash flow between now and the start of Ana Paula from our existing mines. We would look to do a project finance facility for the other half, or 200 million, if we want to be a bit more conservative on the cash generated. We know we had strong levels of interest from a number of banks and sophisticated and private equity groups for that finance package. We think with the paybacks and the economics, we can put together an attractive financing proposal there. And so the aim is to work on that in parallel, such that we can deliver early 27 a feasibility study, the permit, and the financing plan to start building Ana Paula. We commence construction with a view of getting our first production in the middle of 2028 and going through that ramp-up phase to be hitting the 100,000 ounce a year run rate at the end of 2028. So if we look again, this more puts it on those broad steps. What's happening at Ana Paula right now is a very large drill program. I think last time I checked, there was 72 people at site for the drill program. That's providing the material for the feasibility study, metallurgical work, and engineering and design work. We're working on the updating the permit to go to the underground change. And then we'll submit those next year, advance the decline being the big one to watch, complete that feasibility study. And the power of us having cash flow over the intermediate period is that we don't necessarily need to wait for a financing package to order some of those long lead time items, to look at road improvements around the mine, to push that decline down. So move ahead with some of the execution and long lead time. And that's going to be a focus of the early part of next year, is looking for ways to streamline, speed up, and de-risk the building of the Ana Paula mine. We are on track for a formal construction decision in early 2027 and commercial production in the second half of 2028. So even if we move forward to some more, again, putting the geology hat back on and talking about some of the upside, this is a view of the resource looking to the west. So previously we've been looking at it to the north or to the northeast. This time you're looking to the west. You're almost looking down the decline for those who are who have a good geographical sense of this. What you can see is the infrastructure for the high-grade panel going down to the expansion zone. You can see a zone that we've sort of tentatively called the northern zone at the moment, that comes into inferred resources. But what you can see around it at the 2.5 gram cutoff is significant clouds of poorly defined mineralization. A lot of those are because there's very little drilling on the appropriate orientation. Most people will recall that this ore body was drilled from west to east because the geology dips to the west, and that's been a reasonable approach for that style of mineralization. What we really recognized was an east-west control on mineralization, so drilling from south to north or north to south has been the best way to define the high-grade zones. And so we have a view, high-grade panel at the very northern end of that, the parallel panel, and then some of these targets to the north have the potential to be larger. And we'll start drilling those with the northern zone, the first of those, looking to see if we can better define and grow resources in the north. You can also sort of see the clouds of mineralization under the high-grade panel. There's a number of zones there that we think with additional drilling, we might be able to drill into the mine plan. So they're going to get captured in the current drill program as well, that satellite resource targets. And then ultimately, really excited about what we can do down deep. The down deep zone doesn't have a lot of drilling in. It's tough to access from surface. The decline is going to be the best way. And that's why the ramp is designed to go as far south as it is to give us a platform to fan out into that lower zone. We think that can help us drill there where we've got holes, like 13 meters at 29 grams, 40 meters at 6 grams. It drives some of that higher grade that Greg referred to. But geologically, Ana Paula is a shallower representation of the mineral systems of Morelos and Los Filos to the south. and maybe skip forward for a slide, Stephen. Thank you. You read my mind. Here's standing on Ana Paula, Morelos mined reserves and resources over 15 million ounces. Los Feliz on the other side of the reservoir, nearly 20 million ounces. These are very, very large gold deposits. And if we go back a slide, sorry, Stephen, the way they're emplaced is an intrusion comes in that brings in that gold mineralization that comes in fluids and reacts immediately on the outside of those intrusions to form what's known as a contact skarn. And that's what hosts nearly all of the mineralization that Morelos and Los Feliz has. Whereas Ana Paula is a little different. Those fluids have escaped further up into the geological column, and that's what we see in that zone, particularly in the high-grade panel. So, sorry, Stephen, I'll ask you to head back one more slide. As we pull back, we think there's potential to go down deeper below the expansion zone and look for that causative intrusion in the contact skarn. We see on the back of this PEA a very profitable 9-10-year mine life in what we have defined to date, but we think there's potential for a lot more upside should the open resource continue to look like its neighbours, and getting this infrastructure in place is going to really be able to unlock more resources around the high-grade panel in the broader cloud of mineralization and at depth as we drill deeper. It's a pretty exciting target to be able to get the infrastructure in to go and drill and look to grow. Now, Stephen, if we can move 2 slides forward, please. So stepping out more broadly before I open questions, and I note that there's a Q&A button in the webinar, so please jump in and talk about and ask any questions, and we'll take the rest of the hour to answer any questions that we receive. But while I ask for those, if we step back and look at what the corporate news flow is, heavily dominated by us in bringing Ana Paula online, we've always talked about it in 3 levels. We're quite proud of the execution that we've had to date. And so I like to think as we go forward, we can build our profile on 3 levels. One is that quarter in, quarter out execution and some big milestones. So we have our Q3 results to come out on the 20th of November. We have the first ore to be put on the pad in early December, late November, early December at San Agustin. We're looking forward to the approval of the Veta Madre pit at La Colorada, which we're confident we'll get by the end of the year. Confidence reinforced by Silver Tiger's new permit recently, over the weekend. We'll look to then deliver next year's results and demonstrating that we're able to add cash flow to build Ana Paula. Then as we step up into the middle in those green lines, some really big NAV growth steps this quarter. We've put out the La Colorada Tech Report. We're talking today on the Ana Paula PEA. In late November, early December, we expect to put out an updated PFS on Cerro del Gallo. Cumulatively, I think the NAV growth of those is comfortably exceeding the analyst forecast for us, and we think can potentially drive our share price and then move forward to the Ana Paula study. And then the drill bit, we've got the 15,000 meter program at Ana Paula, which we might expand. We've got a rig at San Agustin. We've got a rig at La Colorada. We've got a lot of drilling going on. That's a combination of resource expansion drilling and then ultimately exploration drilling throughout this year and next. So we have the cash flow to be able to put the foot to the floor on all our operating assets, and it leads to sort of 3 levels of cash flow. And I think to close out 2 things to close out before I ask questions. If we can deliver this plan and build Ana Paula for $300 million using our cash flow on a project financing facility, we think we can grow into where our peers have $2 billion plus or minus market caps with no material equity dilution. And if we do that, that means on a per share basis, we stand to perform very strongly. Lastly, and before I take questions, I'd like to thank everyone who's contributed to the PEA, from the Heliostar team to all the contractors and consultants who have put a significant amount of work into it. This is one of the most exciting studies in the sense that you're not going to have to wait 5, 10, 15 years to see this. As we complete the FS, we look forward to turning this PEA into a construction project in a bit over 12, 15 months from now, and then turn it into a mine another 12, 18 months beyond that. So we like to move quickly. We think it's going to be the secret to our success. And we think Ana Paula is the very high quality project that we're bringing online. And I thank everyone for their contributions on that to date and going forward.
Thank you very
Stephen.
much, Charles and Greg. As Charles noted, there's should be a section in the webinar for Q&A. Please put your questions in there, and I'm going to quarterback from this side to address them to the appropriate person or answer them myself here. We've got questions on the situation in Mexico in terms of the community disruption at Los Filos and that mine currently not operating. Charles, maybe you can just discuss about how we operate in the Guerrero Gold Belt and our community relations situation that we have on the ground.
Yeah, so Guerrero historically has had a pretty poor reputation. I think particularly sort of 10 years ago, I don't think we would be talking about this opportunity and this mine and this business case. It's materially improved in that time. I think our neighbours Torex are up to 6 years of quarter in, quarter out, steady state production. They just reinvested 800 million into going underground. So I think there is a continuing improvement in the ability for Canadian companies to operate. There's always a huge gap between reputations changing. And so I think we've probably benefited from that, being able to buy Ana Paula more cheaply than we would have. There's no guarantees anywhere in the world that we work, but we're quite comfortable we've been able to operate quite successfully in Guerrero, and everything we're proposing to be doing has been done quite successfully at the other end of the valley. In terms of Los Filos, as we understand, Equinox has shut down the Los Filos mine, looking to renegotiate some of those agreements. I think they're looking to get, to not have to pay so much in terms of community relationships to operate that mine. I think they've got support from 2 of their ejidos, but not the third. And so I think they're waiting till they get that. In some ways, I think Los Filos' contract issues and those short-term access agreements that roll up every 3 years have been conflated with broader issues with Guerrero. But I think if you look at our recent success, Torex, Peñoli's operating a mine in the state, Lucas Campo Morado mine, Impact Silver, it's quite surprising how much precious metal production is coming out of the Guerrero state in the last few years.
The thing I'd add there, I'm not sure if we touched on it, is that we have a 30-year access agreement with the local landowners for the Ana Paula project. So that was put in place by a previous operator who had the foresight to have long-term planning. So as opposed to 3-year access agreements, we have a much longer term permanent solution there for Ana Paula project. Another question here. Can you talk about how you're going to finance the project? Maybe Charles, you touched on it a little bit here, but maybe you can just again run through that in a little bit more detail for us.
Yeah, I think it's one of the benefits of putting the PEA out is people can then be able to model our scenarios and measure what we need to do to take that to a bankable feasibility level. Our intention is to project financing the shortfall between the cash that we generate and the cash required to build Ana Paula. So we'll be talking to banks and the sort of sophisticated large-scale private equity financiers who would look to potentially build Ana Paula. Again, Media Luna had financing for it very recently, so there's some pretty good catalysts for exactly how you would do that in the vicinity.
Perfect, thank you. Greg, I think you're probably best to address this next one. 2 questions I'm going to kind of combine into one here on the BIOX testing. You mentioned the Mezzo testing ahead of the feasibility study. Kind of question in 2 parts. How confident are you in the 90% recovery from the BIOX versus a few ticks down? And will there be any updates between now and the FS on the testing that we're executing?
Well, as far as the confidence, obviously we want to do a lot more test work, but what we've seen is the ore body doesn't have any of the bad actors that that complicate the BIOX circuit. It is quite this ore body is elevated in arsenic, but if you look at all the BIOX mines running around the world, it's not the highest. It is on the upper end of it. So I'd say we have pretty high confidence. The other thing I would say is as far as sensitivity to the gold recovery to to the sulfide oxidation is it's not linear. It about it probably at 45-50% um, sulfide oxidation, you're 85% of the way there, 85 or 90%. So it gives you a lot of it gives you a lot of margin. But um, as we work our way through the feasibility study, we will have a lot more variability testing. But really, that is more than anything else. It's to deal with, it's to define your operating parameters, or the boundaries, I guess, for the design of the BIOX circuit. We I don't I mean I guess I would say I have a very high level of confidence that it will work. And what we like about it is it deals with the arsenic component better than just about any other option to process this material. But basically leaves you an inert residue. So.
I think it leads to another question that I can see there. Sorry, Stephen, that I'm going to steal is, more broadly for context. Yeah, roughly half of Ana Paula is what we would call good metallurgy, and half of what we call poor metallurgy. The advantage of the BIOX is it allows us to process both and get a 90% recovery. What I think people don't understand about the BIOX is if it's not as effective as it's not binary. It doesn't work or it does work, because of what Greg was referring to about you don't need to oxidize all the sulfide to get the gold out. If it wasn't working optimally, you'd still get 80% recovery from all of it. And if people want to be conservative or are worried about our approach, run the economics on 80% recovery and it's still an incredible mine. So we think the risk profile, it's a really sympathetic risk profile, to the ability to be able to handle all the different ore types. And I think ultimately, given that our focus has been on the high grade panel, as this mine matures, if this mine, to steal a line that Greg told me the other day, if this mine lasts 9 years, such as the study design, it'll be the only mine in Mexico, and that's ended at the end of the study period. We see a lot more potential for a lot more material. And this approach gives us the ability to handle all types of material, regardless of whether they've got the good recoveries or the poor recoveries in the conventional approach.
Maybe I'll just chime in on this. Oh, sorry, go ahead, Greg.
No, what I was going to say, I think, I've spent a lot of time looking at, instances where, where BIOX did not work, to our level of confidence. I think it kind of what I learned in that exercise is that when it doesn't work, it's not because you don't get the recovery. It's because they couldn't keep the plant operating, or they had, severe wear issues, or they had, if they did have gold recovery problems, it, often to be traced back to contaminants, or, basically cyanide coming back into the circuit. So I kind of alluded to that. I mean, over the time that BIOX has been working, has been operating, the level of understanding about what makes the BIOX circuit tick and what keeps the bugs healthy, and it's come so far. So and then all these, like the problems with a lot of problems could be traced back to poor material selection, or designs that didn't really take into account the amount of air that you need to get into the system. So and the bugs get stressed, and when the bugs get stressed, then everything starts to go haywire. So I don't know if I don't know if I'm conveying it, but I say our confidence in it is very high.
In terms of updates as well, I think we will provide an interim update sometime through next year on the feasibility study work, including the BIOX testing, as we go through that, to let investors know where we're at in terms of that process, and provide a little bit of insight into the work being done between now and at that point through next year. A few other questions of various ilks here. Ana Paula has a large land package. Are there exploration targets already there, or is there a regional exploration planned?
Yeah, it's interesting. So since Ana Paula was discovered in about 2010, that's become the myopic focus of all the drilling, initially through previous operators, and then when we first acquired it due to capital constraints. So it's the northern third of the Guerrero Gold Belt. It's a 65,000 hectare land package. Our land package at Ana Paula is massive. The way I kind of think about our upside is at three levels. Right now, we're about to start doing some step out, and we think some of these northern targets just north of Ana Paula, but within the mine infrastructure footprint, look like they might be a bit exciting. So we look forward to drilling those and seeing if we can grow resources in that area. We've talked about the depth potential that exists underneath, but we haven't really talked about the regional potential. We will next year. We've done a little bit of the reconnaissance work now, but we'll turn that into a larger prospecting of the eastern third of the property, which we think is the most prospective. Coarse sort of soils, geophysical testing, and prospecting over those eastern areas. We've got a number of large intrusions that have similar magnetic footprints to those that drive Ana Paula, Morelos, and Los Filos. So no, in the maturity of this district, you've got a 20 million ounce deposit, a 15 million ounce deposit, and if you look to low cutoff grades in the 2023 resource, a 2 million ounce deposit at Ana Paula, there's no way that that's the natural distribution. These curves always fill in. So there's likely to be more deposits in the Guerrero Gold Belt. There's evidence that they're pretty big, and we look forward to, now that we've got our arms around Ana Paula, starting to look out and grow some of those targets. One for people to keep on their radar is our San Luis Ray David target, where we do get 5 to 30 gram gold over sort of 1 to 3 meter widths on surface, in some veining and skarn related mineralization to the southeast of Ana Paula, and represents a pretty attractive step out target. So there is some nice exploration targets, and now we've kind of got our arms around our production scenario in Ana Paula. It affords us the ability to look for a bit more exploration upside.
In that same exploration trend or genre here, another question: how much drilling is focused in terms of meters or dollars at the northern zone within the current program? And then how far along is that current program, and when will it be completed / announced to be extended, if that's on the offing?
Okay, multi-part question, and maybe I'll answer this and one more, and then we'll wrap up the webinar. In terms of, we're about just over 10,000 meters through the program. I expect fairly shortly that we might expand that program, so watch this space on that front. Right now, we're probably going to drill something in the order of 1,500 meters to 2,000 meters in that northern zone, and if success dictates, obviously we change that as well. These are dynamic drill programs based on the results that we're getting. The next set of results we expect to see will be more infill drilling in the main area, and then I think we can look to some of those northern results and see if that starts to flesh out the way we hope it can. And so I think I answered. Was there any question I missed there, Stephen, on
When the current drill program is scheduled to run until, I guess?
It'll run until at least early next year. How far it runs will be subject to the results that we're getting. We'll probably cut it off at the end of January for the feasibility study, but that doesn't preclude us from doing extra drilling if we're having success.
Last question here at a high level strategy type of question. You have a good plan to use cash flow to develop Ana Paula to get to 300 to 500,000 ounces on the upper end. Where does M&A fit into your priorities as a company?
Oh, wow, that's a big question for the last minute, because I could talk a lot about it. We're in this wonderful position that we have Ana Paula, this quality development asset in front of us, and incredibly, we have a second one behind that with the Cerro del Gallo project. We're very much looking forward to putting a PFS out this quarter to demonstrate the economics. It had very attractive economics at a $1,350 gold price, a 2.9 million ounce open pit project in Guanajuato at 0.5 grams gold equivalent. We expect that to sing in the current gold price environment. So our core plan is to build Ana Paula and then use the cash flow of Ana Paula to build Cerro del Gallo. From there, we would have additional cash flow to build us to our ultimate goal of being 500,000 ounces a year. We're not really not aggressively chasing M&A. We're looking at the odd opportunity that comes across our desk. From our perspective, is it has to have some technical merit that we think's been overlooked, such that we're not paying full value for what we see as the geological potential. It's pretty hard for development projects to compete with Ana Paula. I'd love to buy another producing asset, but it's hard to find anything on fair valuation. So we're in a fortunate position that we can grow if we see the right asset that fits our skill set. But if not, and we deliver Ana Paula and ultimately Cerro del Gallo, we think we can get to 300,000 ounces organically without any equity issuance. Never guaranteeing that we don't do that. If we can grow resources or add production, I do reserve the right to issue equity. But I think we've got a really strong 100% owned portfolio that can grow us into a mid-tier producer and can do it with some of the best per share metrics of our peer group.
Great, thank you very much. We're just past the top of the hour here, so apologies if we didn't get your questions, but please feel free to contact us through the email provided or on any of our social handles to be able to get your questions answered there. Thank you, Charles, and thank you, Greg, for the in-depth dive into the Ana Paula project and our path forward as a company. Thank you, everyone else, for tuning in, and we hope you found this hour valuable. Thank you very much.
Thank you.
Thank you.